You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
It's time for Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Russell Investments, home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to the Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing we like to refer to around these parts as the Options Insider Radio Network. No shortage of good programming for you guys to enjoy, including well over 100 hours of this old Volatility Views program. Where can you find that? Well, of course, the flagship, theoptionsinsider.com. Surf on over there. Click on the Insider Radio Network tab right there in the top left corner of the homepage, and bam, you're pretty much off to the races. You're good to go. If that's too hard for you, surf on over to iTunes, Stitcher, Aha Mobile, TuneIn, a few others I'm forgetting to mention. You can find all of our shows there. Search for Volatility Views, and there you go. You're off to the races. And if all of that was just too much typing, too much work, just go to one place. Just go to your app store of choice. Could be the iTunes, could be the Google Play App Store, even the Amazon App Store. Type in our Options Insider Radio Network, and bam, you'll get our mobile app. And that's it. You're pretty much done. You'll have all of our programs from here to eternity for your listening pleasure. So again, no shortage of ways for you guys to enjoy our shows. And of course, when you're listening to them, if you have questions, if you have comments, you have feedback, send them in. We love to hear from you guys. No shortage of ways for you guys to do that as well. And joining me on the old program today, my friend / lifelong nemesis, the greasy meatball himself, Mr. Mark Sebastian from OptionPit.com. Mr. Greasy Meatball, welcome back to the Volatility Views program, sir.
Hey, thanks for having me, Mark. Good to be here.
Good to have you. And a lot of stuff kicking off this week. So I think without further ado, let's dive right on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, that funky tune means it's time once again for the old Vol Review. If you're new to the show, this is the portion of the program where we break down the week that was from a volatility trading and analysis perspective. We are recording this on Friday, February. I'm a little bit early in the year this year, April 17th, right around middle of the session here to give you some frame of reference for what we're talking about here today. And as we're recording this, most of the major indices taking it on the chin just a wee bit. The S&P actually a bit of the laggard, only down 1.1% on the day. The Dow and the Qs also off about 1.5% today. So the market getting spooked a wee bit. And what is spooking it? Well, a couple of things, but primarily it seems to be the hopes we all had for some sort of resolution to the Greek stalemate seem to have perhaps dimmed a little bit just in today's session. The chances that they could actually get their reform deal with the EU done by next Friday to unlock some of those bailout funds doesn't really seem to be perhaps as probable as it was just even yesterday. And of course, that could mean Greece missing some payments. That could mean bailouts and bankruptcy and all that other fun stuff. And of course, the market selling off quite a bit. That's in the face, though, of some pretty good earnings we've seen, at least so far, this week, with a lot of the major names looking pretty good, including the formerly known as the Widowmaker, now I guess the fortune maker Netflix, just rallying hard off some strong subscriber news and some love. But all of that not enough to overwhelm the broad macro fears. And Mark, when you and I were sitting around on this program a week ago, kind of pontificating on what could be coming to pass here in the marketplace, didn't seem like a heck of a lot really could be poised to bring the old VIX back into the north of the 12 handle range where it was trading last week. And of course, here we are today, VIX Cash hovering right around 14.3 or so. And we were kind of we were kind of mocking our friend out there who was loaded up on some upside in June just for some size last week. Who knows? Perhaps our friend last week was Greek. What do you think?
I don't know, but I don't think that this feels like a one-off event. I'm unimpressed. Let's just put it that way. And I don't think that I feel like this Greek thing, it's just getting old. I feel like if we don't talk about the Greeks at least once every quarter, like a bunch of baby seals get clubbed or something like that.
I had a similar feeling, actually. I was like, this almost felt like the Greeks kind of saying, hey, don't forget about us. We're still here.
It's so stupid. And what is different yesterday versus today? Nothing, right? And yesterday the market was up a little bit and the VIX was 12.5. So, or 12.6. So I don't know. I think this all looks kind of silly, but SIBO's probably happy. They're getting some decent VIX volume today.
Yeah, they've been lighting it up right on the heels of us talking about it here on the show, kind of not really getting a lot of volume. Of course, Cranes and others writing some pretty scathing articles to that effect, saying that the volume was off dramatically in their volatility products, despite the fact that conditions seemed somewhat, it's not overall, but somewhat favorable to at least a little bit of vol trickling into those volatility products, yet not really seeing much at all. We were kind of scratching our heads about that in this program recently, saying, man, some days under a couple 100,000 contracts, that seems fairly light for such a market-leading product. And, of course, this week, lighting it up to the tune of some days pushing the 800,000 contract limit. Of course, nothing to match our friend last week, who, when he lit it up in June, he drove the total over 1 million contracts. That one is still just an impressive trade on several levels. Of course, you guys remember last week we were also talking about some of our other friends out there in VIX Options. Maybe before we even get to that, let's just talk about the range we saw this week from an overall VIX perspective. Like we were talking last week, it was kind of languishing in like that 12.5 or so region, talking VIX Cash land now. And the week kind of started off in that range, and it seemed like we were going to kind of hover there, despite the fact that earnings were kicking off, despite the fact that it might be time to maybe inject a little bit more vol back into the marketplace, even though everyone and their mother was predicting a pretty negative earnings season that had apparently been discounted into the market, and no one was really overly concerned. Some of the numbers coming out, at least so far this week, this week I should say, have been fairly decent, as I was saying. So we did get drifting a little bit higher. We saw a high this week of about 14.75 out there in VIX Cash land, so about a little over 2-handle range out there in the VIX Cash. We also saw some interesting trades like we were talking about last week. Mark, remember our friend who also, in addition to our friend lighting it up in June, we had a lot of crazy trades last show for whatever reason, and in VIX Options. And of course, we had our very, very near-term friend who picked up, I forgot the exact number here. It was like 91,000 of those April 13 puts for 11 cents. And we were kind of speculating on that's a fairly near-term trade. Our friend there is going to need some pretty aggressive movement in the underlying for this one to really pay off in the next few days. And he held on to it for a little while. He finally gave up the ghost here on, I believe, Tuesday. On Tuesday, he dumped about 91,000 of them back into the marketplace for a nickel. So he paid 11 cents, sold them out for a nickel. Quick way to blow about $500,000 show in a few days. So I guess he had nothing else better to do with that money, huh, Mark?
Correct. Speaking of nothing to do, I did get a little insight into that big trade from last week.
Oh, did you?
There was that third piece, the 19 calls that didn't make a lot of sense.
Yeah, that was the one we were speculating on, whether someone who facilitated it was putting that up to hedge their own risk.
No. What happened was the guy had been open on those 19 calls and was shutting that down and converting the position. So he had been long the 19 calls, then flipped the position into the 17.23 1x2.
That makes more sense, because remember, you and I on the show were kind of like, this other leg, how does this fit in?
Sense.
Yeah, it doesn't make any sense.
But yeah, he shut the position down, and that was why.
So yeah, we mocked him, we unfairly maligned him. He seems to, at least so far, be on the right end of that trade. He's got a little while for those June calls still to pay off. And of course, he can't have, it's a 1x2, so he can't have the, naked mad explosion of vol, because that would also, if this Greek thing were to implode somehow and send us spiraling northward, I don't really see that happening, but if that were to happen, maybe perhaps he would be upset. But so far, at least, I think he's probably a pretty happy camper. But our friend in the near term, the April puts, not really, I'm trying to think of a scenario, Mark, where I would be, if I had that capital at my disposal, where I would say, I need to pick up about 91,000 April puts with about a couple of days to go in VIX. What is your thought process? What are you hedging against and or speculating on in the very, very near term that would make you want to blow about $500,000 in a couple of days like that?
I have no idea. I had heard through the grapevine that they're doing that against another like high frequency type trade, and that they plan on losing on that. So that was kind of what I had heard. Although I don't know per se whether it is that customer or not.
Yeah, the assumption going into that is they have something else on that is probably lighting it up for them, and they don't maybe sweat this $500,000 that they blew on this position. This was more of a hedge against the worst coming to pass in an obviously very, very near-term capacity. They were concerned through Wednesday, apparently, and maybe they got the protection they wanted. They were willing to shed that $500,000 on against whatever else they had working. But of course, speaking of things that are working, our friend last week who was lighting it up in June is just dominating the open interest, dominating the big hot strikes out there in VIX land. We were talking last week, listeners, about that 17.23 1x2. Well, not surprisingly, looking at the hot strikes for this week, the June 23s leading the charge by a mile. Nearly 400,000 of those open, 380,000 to be precise. Pretty much all of that coming in that massive 1x2 we talked about last week. And number two, not surprisingly, still a distant second, about 50%, with about 207,000 of the June 17. So our friend there in that one mega trade, pretty much dominating the charts here. The next closest is a little bit closer to home, a little bit more sensible. The May 20 calls, also about a little over 200,000 contracts open in that list. And it kind of just falls off a cliff, as you might imagine, post-April going away here. Listeners, the May 15 is about 128,000. The June 20s, it's a little bit longer term, 120,000. And then the May 19 calls, June 15 puts, May 23 calls, June 30 calls, and May 14 puts, all wrapping up the bottom half of the list with about a little over 90,000 each, and a little bit under for the May 14 puts. So not a heck of a lot open. Not surprisingly, April just went away. A lot of open interest went away with that as well, to the tune of about 4.22 million open. That's about 3.1 of the calls, about a little over 1.1 of the puts. That's actually a little bit higher than we would expect to be at this point here in the cycle, given the fact that, like I said, our friend came in last week and just added so much, nearly 500,000 contracts to the open interest over there. So interesting stuff. We've been parsing the VIX volume for something analogous, something of equal size and merit this week. And they're putting up a lot of numbers, certainly. There's no shortage of volume going up out there, but it's pretty much a strike palooza, if you will, across the board. There wasn't any real big dominance. Seemed to be some action in the puts yesterday, but nothing of, certainly not of any equal scale to last week. Mr. Mark, I think we got so deep into the Greek stuff, we didn't get a chance to really kind of parse your view on the week that was. So in addition to all this VIX paper we've been talking about here, what else really caught your eye in the week that was from a vol perspective?
I mean, really, we spent all week rallying 30 points and we're giving it away now. We've got the VIX climbing, lots of activity. I think that really that GE deal was a big driver of Friday through this Thursday. And then this Greek thing is a good reason to basically give away the week. Russell, in particular, has been the strongest of the indexes. It was right near it broke an all-time high this week. And I was expecting the S&P to follow suit, and that's not the case. So kind of some interesting stuff there. I'm hearing, I don't know if you're looking at Time Warner Cable, but it's falling out of bed right now as we're talking. And it looks like the Department of Justice is going to block the deal. Interestingly, it looks like yesterday a guy put on a massive risk reversal, but long put short call.
Fancy that.
Into this deal. So
what a surprise that we have some well-placed paper. We do a lot of that here on the Options Insider. Yeah. Listeners, if you're not familiar with it. Yeah, I'm looking at Time Warner right now. Listeners, of course, TWC, if you're not familiar. And it is indeed taking it on the chin. Was this down about 8 handles? Seems to be gapping around now, only down about 7 or about almost 5%. That's the name that does about 10,000 contracts a day, doing nearly 14,000 already today. So going to be a fairly robust day. And yeah, if that deal doesn't come to pass, that's going to be a big crush there on that name. Look at today's paper out there, and you see a lot of preponderance of calls, which is interesting for a day where so much activity you think would be on the puts, but still interesting stuff nonetheless. Good stuff here in Time Warner. Speaking of weird stuff, I was chatting with your buddy Andrew yesterday, Mark, on our option block show, and he wanted me to mention to you this kind of out of left field story, a little bit relevant to what we're talking about here, because everyone was always talking about is so much of the institutional volatility we're seeing in the space these days, perhaps a direct result of some of the regulatory moves we've seen in a lot of the banks having to pull back from being liquidity providers in a lot of these products, hence wider spreads, hence more volatility, more erratic trading and volume out there. And he wanted me to ask you about what you think of our good old friend Elizabeth Warren calling for revising the call for a transaction tax. He thought that would suitably rile you up.
That is the stupidest thing on the planet. And if you want to drive a bunch of stuff from the from U.S. overseas, you'll have every exchange headquartered in Bermuda, and that's just the silliest thing. There already is a small transaction tax, but I could see what that might do is kill HFT, but there's better ways of killing HFT than a transaction tax. My guess is that would be a net job killer, and net tax receipts would go down because of a deal like that.
I think Andrew knew that would get you riled up, so I was just passing that along.
Silliest, dumbest thing I've ever. Elizabeth Warren is so clueless. It is unbelievable.
Politician clueless about the markets. You say you're mad, sir.
I know.
But you're right. It would be like kind of curing the disease by killing the patient. If you think HFT is the greatest ill.
Well, and I think that's another one. We have to hear about a transaction tax once a year being brought up. Otherwise, we have to club baby seals.
It's Greece or it's transaction tax. Otherwise, the baby seals are taking it on the chin. Speaking of things that aren't taking it on the chin, you talked about Russell doing pretty well from an index perspective, outperforming. And looking here at our old friend Russells, who, of course, are big parts of this show, and looking at RVX. RVX still not really, even despite the movement, still not catching fire out there with the open interest of about 50 contracts there. So I know those guys are working feverishly behind the scenes to work on some new, interesting, new pushes for that product and kind of presenting it to the different core audiences that you'd think would be active in a Russell product. After all, it is a little bit more small caps, more volatile by definition than the S&P stuff. I think that would be attractive. Same thing on the short term with, again, our old friend VXST. Still kind of a bit of a head scratcher out there in terms of all this near-term movement, all this paper we're seeing in the mothership, the flagship, the big VIX product, and yet a open interest of 13 contracts out there in VXST, volume of about 12 total today. So yeah, just for whatever reason, these handful of contracts, people still want to focus on the big mothership flagship VIX product. We actually have a listener question that gets into that in a little bit about some alternative products that are floating around out there in Europe and why they don't get any love either. But it seems like all the oxygen in the room is being sucked up by the mothership, and there's not enough left, at least for now, for some of these other products out there. Before we get into some of the other aspects, speaking of other products, Mr. Greasy Meatball, this is usually the part of the show where Jared dives into some interesting international volatility. He unfortunately couldn't make it today. He is indeed on assignment over there at BGC Partners. There has been some interesting stuff. We were chatting again with your cohort there, Mr. Andrew, about how Russia looking a little bit better. You can make some money out there in their rubles. So what, if anything, caught your eye over the past week from an international vol perspective, Mr. Greasy Meatball?
So yeah, Russia off to the races. You want to see something ugly, pull up FXI, which is China. And, China's got some rule and reg changes coming over the weekend, and they are absolutely obliterating the FXI, that index, the FTSE, the Chinese FTSE. It's down to the tune of almost 5% right now, and Vol's up a good 2 points, back near 32%. So if you want to see some volatility, look to that FXI, EEM. They're going to launch those options soon. EEM's down 2%. Europe was down big on the Grecian formula. And, so really, internationally, equities kind of murdered today. So we're actually receiving, we're getting it better than kind of everybody else, as I go through everything. Europe is down over 1.5%. We're just down. Yeah, we're down almost as much, but a little less.
Yeah, it's been interesting stuff cooking out there in China over the past week or so, particularly from a derivatives perspective. You're, of course, referring to the FTSE taking it on the chin, and it is indeed down nearly 2.5% or about nearly 5% today out there in FXI, doing some serious paper. This thing averages about 100,000 contracts a day, doing over 300,000, 3.25 right now as we speak. And again, we're only about a little over halfway through the session today. So some paper lurking out there in good old FXI. We also saw China, speaking of futures and derivatives out there, they're launching their small cap CSI 500 index futures. So if you're looking to trade some products, I know we were talking about this time, actually, about a year ago, there was a lot of talk about China really opening its door to embrace listed options and more listed futures contracts. Kind of didn't happen. They kind of punted the ball down the road a little bit. Now we're starting to see little cracks in that dam. This one being perhaps a big one. This is a little bit of a cheaper contract. I know one of the big stumbling blocks I heard, Mark, and maybe you heard this as well, when they were going to make the big announcement last year, was that the government was terrified that retail would come in and just speculate all the livelong day and blow themselves out on these contracts. So they were talking about making multipliers that were just absurd, 1,000 and more. So retail could never afford to touch these things. And now here we are a year later, and we're finally having some of the little bit smaller on the contracts listing here on the CSI 500. So who knows? Maybe those that wall is starting to break down. Maybe they are starting to be a little bit more open to retail participating in these products. I know we were talking just a week or two ago about how much vol we were seeing in so many Chinese names, and how it would be great to have more listed native products over there that we could trade, as opposed to all these options on ADRs and things like that. Who knows? Maybe these smaller cap CSI futures are the way forward. Have you explored these at all?
No, I know there are a lot of people watching them, and it's really interesting. But I just don't. I haven't looked too deeply in them. I'll be honest. I've got other things that I'm dealing with.
All those personal crises over there in the Sebastian household, sir.
Exactly. Well, yesterday my son hit his head on the wall, and he was crying for about 4 seconds, and until he figured out how much attention he was getting. Then he started crying for another 5 minutes. Then he stopped. As soon as we put on Wild Kratts.
That is usually how it works. Before we get into the minutia of child rearing, we'll move on to another area. It's not really had some crises, and now perhaps we're starting to see the other side of that. That is indeed out in the crude land, Texas tea, the black tar, the black gold, whatever you want to call it out there. People are pontificating for a while. Are the bulls back? Oh no, the legs got cut out from under them. Oh, the bulls are back this time. Nope, sold off again. It looks like this time at least the bulls may have a wee bit of traction. We've been generally trending upward in most of the big products. Of course, WTI and the Brent have been trending north for the better part of the past few weeks. Again, vol also coming off commensurately in a lot of those products we look at out there. Of course, OVX, which is the USO volatility product, about 43.5 or so, actually coming off today again. About 42.5, a little bit less than that now. And OIV hovering around that, so about 42 or so range as well, in the 42, about 42, yeah, about 42.5, a little bit less out there as well. So a lot of interesting stuff cooking out there. Mark, are you a believer in this crude rally, or you think this is kind of a bit of a setup to just cut the legs out again?
No, I mean, I'm a believer, not just a believer.
I know you're a believer, but we'll leave that for our pop culture show.
A huge believer. Yeah, no, I actually think that we are on, I think the sell-off's over. And, we're not going to get a V-shaped recovery, but I do think we're getting like a slightly upward sloping L. shaped recovery. I think it's going to be above 50 for the time being, and maybe below 60, and maybe we'll get if it is going to get a leg higher, it'll be into the summer.
Yeah, you think that summer driving season, the refining, all that stuff would start to really spike it a little bit northward. Maybe we're already seeing some of that playing out in the marketplace right now. But people have, of course, been speculating for a while on when this bounce, when this move would start. People initially, after the sell-off, started really diving in to some serious upside, buying some upside call vol in WTI and Brent, and all of them got rudely trounced. And then they slowly, if you watch those commitments of traders reports out there every week from the CFTC, they saw how eventually they started to pare off their positions quite a bit until the point where crude had just sold off so low they started piling back in again. So it was that initial blush, they got burned. Now people are starting to pile in again. They think at least that the bull is back in the near term. Vol, of course, not really out there as this continued rally persists. We'll of course see if going into next week if we have the same story on our next episode, or if we're going to be talking about how people are cutting the legs out of crude again. I don't think we'll be talking that way, but you never know what a week will bring. But speaking of what things will bring, I want to make sure you guys get a chance to bring your own questions, your own ideas, your own comments and insights here to the old program. So without further ado, let's dive right on into our volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, you heard the man. No shortage of ways for you guys to share your questions and your comments and your insight with us, as well as with your fellow listeners out there. We've got kind of a wide range of different questions cooking out there. Let's jump to this one here. This is kind of interesting, Mark. This is the one I was referring to earlier. A listener kind of asking about some VIX alternatives and why they perhaps don't get some love. This question comes from a listener goes by the handle K9. He or she writes, why doesn't anyone in the U.S. talk about VSTOXX as a volatility gauge? I think it does a better job of measuring overall vol by taking the square root of the implied variance rather than the convoluted VIX formula. It also doesn't have all the outside influences polluting the calculation the way VIX does. Maybe this should be something you guys include in your program going forward. That's a good suggestion, Mr. and Mrs. K9. You know, we're always looking for interesting things to put into the vol review there at the top of the show. And we have flirted with including VSTOXX in the past, and for a variety of reasons we haven't done so. It doesn't get a lot of traction here, as you point out, and it hasn't been moving that much. That said, today is certainly spiking, as you might imagine a European-oriented volatility product would be doing. It was up about nearly 5 handles last I checked, to around 25 earlier this morning. That is, I know, Mr. Sebastian, cover your ears. It's about a 25% gap up in about one day. You can do the math, I'm sure, at home there, but still just a crazy move. So a day like today, VSTOXX probably getting a little bit more love than you might expect, given all these other kind of domestic U.S.-centric volatility measures like VIX and others. But it's an interesting question, Mark, and maybe we should consider this. What's your take on the whole VSTOXX product, and maybe also why you think it doesn't really get a lot of love around here?
You know, because it's kind of a combo of a bunch of different markets, and it's not U.S. based, and the futures are pretty active. But if you talk to the European guys, they trade more VIX and they do more hedging in SPX than they do in their own markets, and that's probably why.
Yeah, that's true. How often have you and I joked about the myriad Frenchmen on the other side of the SPX phone? They were always French.
Seriously.
Every customer that called up the pit was always French. I never could really make heads or tails of why that was, but clearly a huge French cabal active in the SPX. So maybe that answers your question there, Mr. or Mrs. K9, that a lot of your countrymen, I'm assuming you might be European, maybe not, a lot of your countrymen are already playing in a lot of the listed stuff here that are active domestically. They don't even see the need. Of course, I was talking to a few people down at the big FIA conference a few weeks back, and those people are international. They're from Europe, they're from South America, and everywhere else, Asia. And a few of them brought up the topic of VSTOXX with me. So I think there is some interest in bringing that over. I heard someone joking with me that they thought the SIBO was going to list a VSTOXX product because they're bringing in all these other things like EAM and everything else. I didn't really see too much credence in that, but it would be interesting if they had VSTOXX listed and VIX, and you could trade them both in the same place. Would you be interested in that, Mark?
I think so. I think people would want to trade something like that for sure. But again, VIX and VSTOXX they're correlate pretty well, and do you really need both in the U.S.? I mean, I get why you use VSTOXX in Europe and VIX here, but again, like we said, really everybody uses the U.S. markets to do their hedging anyway. So it's just a lot of redundancy.
I'm trying to pull it up here while we're talking. I'm not sure if I'll be able to pull it up in time, K9, but I'm trying to see what the ADV out there is in VSTOXX so we can kind of compare it. I mean, obviously we were talking about VIX. It's been on the low side, it's been ebbing a bit until the past week or so. It was doing about 200,000 to 300,000 contracts a day. Now up in the 800,000 or so range. Certainly VSTOXX is not doing that, but maybe we can find some ADV numbers out there by the end of the show, and you can see also for yourself why it's not as perhaps attractive as a lot of the other products here that are just lighting it up. Even on a light day, are still doing a lot more volume than most other products. But meanwhile, let's move on to another question. This one comes from Fred. This one's up your alley, Mark. I think you'll like this one. He writes, he says, my study of options is enjoyable, but it takes so long. I'm going to be 200 before I know anything. I think that was just his comment to open up the question. Then he goes on to write, do you think Expiration Friday has changed in significance in recent years? Is it not really that much of a big deal anymore? An interesting question. We kind of commented on this before as well, kind of how the prevalence of so many short duration contracts, the weeklies, pretty much every product across the board, equity options, index options, futures options, they all have weeklies. People are talking about dailies coming sometime in the next couple of years. So it's all short duration all the time. So every Friday is now expiration with VIX. You have other days thrown in there for expiration. So there's expirations pretty much all the time. In fact, we were joking on a recent show that the whole triple and quadruple witching thing that we all had beaten into our heads when we first got into the market as being some sort of significant event is really kind of meaningless now as well. So that's kind of a good point. What do you have to say here for our friend, Mr. Fred, Mark, about the relative significance of expiration? Maybe you just disagree. Maybe you think it's still very relevant, as well as his lament that it's going to take him 200 years to learn anything relevant about options.
I mean, it's not going to take 200 years to learn anything relevant about options. You just need to go to the right teacher. But what I would say is, Expiration Friday is less important because there's all these other expirations. So you don't have the same huge rolls taking place, yada, yada, yada. Where expiration still matters is in the index products and in the futures products, but that's really about it.
Yeah, and you get out there in some of those products like SPX and others that have active rolls and things like that. You can get a little bit run over, quite literally sometimes, if you're not really sure how all that stuff really works out there. But you're in some of the futures options product, clearly they have rolls going in them and things like that. So in those areas, you're right, they still have some activity, but aside from that, not really. I mean, you don't really see, the weeklies on Apple every week, and that's not really causing a big furor. Maybe Apple Watch Week notwithstanding, but you don't see the big furor of those every week. And it's kind of made the monthly expiration cycle, the regular monthly expiration. It used to be such a big event, Mark. You walk down to the floor of the SIBO. I remember you remember this, of course, probably saw on the Amex as well. You could tell just visually who was long premium and who was short premium, just because the long premium guys, they were probably watching the clock and keeping an eye on stuff, but the short premium guys were just sweating profusely and sucking down Tums and looking at the clock in horror. And there was a marked contrast. And that was once a month. It was a special thing. It only happened 12 times a year. There were guys who came down just to trade expiration. There weren't that many left of them by the time I got down there. But there were guys who were just expiration traders. They were trying to scoop all that under parity stuff, which there wasn't that much of, but trying to. You don't really see that. You don't see guys, I'd imagine, walking on just for every Friday now, just to trade. That'd be kind of weird.
Yeah, no, you don't see that anymore. But though I feel like the VIX expiration is more important in the equity world, almost as SPX expiration now, because everything expires every week now. The only thing that really in equities that expires every month is VIX. And then the one area where I think Expiration Friday really does get screwy is especially if the crowd has a big, huge role they need to do in going from like a June to Sep or a Sep to December. You can see some screwy things happen in the roll, but that's really it.
All right, we got before we close up the mailbag here, Mark. We had an interesting one come in from one of our regular commenters, Mr. Mark Brand. He was telling me something. I wasn't that familiar with it. It's something he said you inspired, so you probably are. He said he was trading he said he was inspired by one of your videos to trade an iron butterfly trade in Apple. He was talking about selling the week 2, 3, and 4 iron butterflies, 6 strike iron butterflies, and then buy a week 7 straddle. Is that something you were advocating? And if so, sir, give us the nitty gritty.
I maybe was talking more about doing it as kind of like a time fly type of thing where you're long something way out of the money, something at the money further back where decay is a little slower, and then selling, wings around it. I'm a big proponent of that trade. I think you can do. I love trades where I'm getting kind of long vega and some cheap relative premium, and I get to sell something else around it. I think those can work exceedingly well, and it sounds like that's what this guy has.
Yeah, he said he was modifying something you did. So clearly you did one of your videos about Apple weekly trades. And clearly he was inspired by it, sir. So there you go.
I did a presentation on weeklies last week, and I was blowing people's minds with stuff. I mean, it was incredible. People were like, wait a minute, that option has, people have bashed into their heads that there's all this decay in weeklies, and they don't realize that it's only at the money. And you can make more selling wings 2 weeks out than you can make selling wings a week out. And it really has to do with, how decay becomes much more linear as we move further and further out of the money. So, just be aware of that. And if you want to see that weekly thing, you just go to optionpit.com/weeklies, and you can view that video.
I hope you're okay. Sound like you were falling off your chair there, sir.
I'm fine. I got this.
The earthquake getting you out there and scenic Riverside.
These Chinese, I taught some Chinese a couple weeks ago, and they gave me this cool looking thing, except I can't figure out what it does because everything's in Chinese.
Well, I'm glad you could play with it on the show, sir. But you bring up an interesting point. That's something we've talked about before, kind of the little bit of the unexpected nature of decay for a lot of those products. We talk a lot about decay. Maybe we've been guilty about it too, focusing mostly on at the money and how they have that kind of exponential curve in the final 2 weeks where you're right. And the wings, I think anyone who's sold an out of the money put or call has kind of experienced this empirically and kind of been frustrated by it. How come in that last week they're waiting to get that final dime, or 15 cents, and it won't go away. They've experienced that themselves and been frustrated by it. So they probably know that just from their own anecdotal experience, even without even seeing the charts. But I think seeing it put in front of them, the way that these out of the money wings actually do decay, I think you're right, may actually open a lot of people's minds.
I mean, who wants to the question is, why would an option that is, why would that last dime decay away? I mean, when you are looking at that option and saying, oh, this dime should go away quickly, ask yourself, well, would I sell this option at a dime? And if the answer is no, then it's going to still be a dime tomorrow. So, one thing I always advocate is closing of options that are worth a dime or less. And it's because that theoretical value theoretically, it's worthless in 2 days. In actuality, it's going to be worth something until expiration Thursday or Friday.
Yeah, people always, they get that first 30 cents and they get greedy. They want the last 10 or 15, and they'll take almost as long to get that last 10 or 15 as it did to get that first 30. And they get a little frustrated. And that's always, of course, the time when the aberrant moves can happen against you and all that money you made is wiped out and then some. Again, we used to do the same thing. We used to close out I still, close out everything going index. That's why we advocate don't hold your stuff into all that nonsense VIX settlement garbage. If you think it's being manipulated, or you're one of these people who always writes to us with complaints after every VIX settlement, then you know what? Don't trade through it. You can spare yourself that horror. I'm not sure, Mark, if you saw that guy recently who they had a big profile in the New York Post about him, how he didn't know VIX settlement. He blamed Interactive Brokers for having the wrong date. We may have talked about this. And
and he won $2.4 million.
He won $2.3 million. And so the New York Post...
I found out after the fact, he lost $24 million.
Yeah. So
basically, FINRA said it was 90% his fault.
Well, the New York Post reporter calls me and asks me about that. And I said to him point blank, I said, this guy's managing $100 million in VIX futures and he doesn't know when the expiration date is. That is mind-boggling. That is madness. That man should have all of his capital
Did he quote you on that?
Oh, yes, he did. Yes. It's in
Let me see. I got to look that up.
It's in the New York Post. I got a few brokers writing to me after that saying, well said, sir. You wanted to tell us to customers for years. So it just blew my mind how you could, something that simple and let that screw you up. If you're managing that much money, it is incumbent upon you to know the intricacies of your product, I would think. But hey, that's me. Perhaps I am perhaps a little bit have high expectations for people in the money management space. All right, that's good questions, everybody. We love to hear from you guys. If you want to write in, no shortage of ways for you guys to do just that. Surf on over to the website, theoptionsinsider.com. Leave a question or comment there, or use our website feedback form. A lot of you guys like to do that. Also, of course, find us on social media, twitter.com/options, facebook.com/theoptionsinsider, and stocktwits.com/Options Insider. So no shortage of ways for you guys to hit us there. And of course, the old-fashioned way, we are just questions at theoptionsinsider.com. And again, if all of that is too much for you, just grab our mobile app. The iOS version has all the feedback stuff baked into it. I'm not sure if all the Android ones do. I think there's some minute differences there in the app. So if you can't send us feedback via the Android app, then just hit the other ways, and we'll love to hear from you. Love to hear from what you guys have to say. But meanwhile, it's time for us to keep on rolling into our final segment. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, you guys know the drill by now. This is the portion of the show where we prognosticate recklessly and perhaps even a bit wildly on the week to come. Last week, we were joking that person loading up on VIX upside in June made us maybe perhaps reconsider our notion, but we were just kind of joking. We really thought it was just going to kind of drift down and hang around in that 12.5 or so handle range, and it was there at the beginning of the week. Then our friends in Greece seemed to conspire to say, hey, we're back, and everyone should pay attention to us again, and we, of course, have ticked up. Mark, at the top of the show, we were talking about how maybe this could be perhaps a one-off event, and we may be back in the 12 handle range or so by the time we do the show again next week. Is that still your viewpoint, sir?
Yeah, and my viewpoint is someone sophisticated enough to manage $100 million VIX futures portfolio, $100 million VIX futures portfolio, also has the resource to verify something as simple as the expiration date of the product, particularly if that expiration poses significant risk to their portfolio.
I may have said something even stronger, and he toned me down.
That's awesome. This guy, he deserves every single dollar he lost.
Yeah, I have a hard time when people, they make these errors and they blame, brokers can make errors. That happens. They can do. This is not really a case where I don't think this is really merits.
No, this guy is a jerk for suing, in my opinion, and he's probably just trying to save face in front of his clients and not. I'm assuming he lost a bunch of clients over this too.
Yeah, I can't imagine you take a 25% hit in your portfolio that a lot of people are lining up to keep what's left what they have with you. But aside from scolding a foolish VIX traders, what else are you watching for the week to come, sir?
Yeah, I do think this is one-off. I think that we could see an all-time high in the S&P 500 next week. I think we'll see the VIX back in the 12 handle. I do think that we're heading for some volatility in May, but I think the end of April, we'll get through this Greek crisis. If the Greeks are experts at creating crises to try and adjust their haircut, and they may be at that again. I think they're going to get a deal.
And of course, we do have earnings on the horizon for next week, so who knows? Maybe the big Goog or a few others, Amazon and others,
Apple
could perhaps, Apple, of course, could perhaps inject some life back into this market from a vol perspective. Apple's on the 27th, I believe, so like 10 days out. But still, yes, a lot of stuff. Chipotle, my old friend, the stealth Apple.
Oh, yeah.
I mean, if they report bad burrito numbers, watch out. S&P off 10% easily that day.
Oh, for sure. Well,
easily.
I'm pretty sure that, since they parked one right below the headquarters of Options Insider, they've not had an issue with earnings.
Yes, we keep that one branch near the old Options Insider Studios.
Funny how they put it
pretty
right
below
your office, isn't it?
It's very there are some here, not right below us, but pretty close, within a few block radius. There's several. So our Chipotle needs are well attended to. Let me just say. So, yes, a lot of earnings on the horizon. Well, this Greek thing probably is a bit of an aberrant event. You're right, Mark. But, there are earnings. So far, earnings haven't really seemed to, inject a heck of a lot of vol into the marketplace. People seem to already have written off the fact that the season is going to be pretty much terrible. And so any positive surprises are just that, positive surprises. We'll see if we get any aggressive negative surprises to the downside. Maybe a lot of the retail-friendly names coming out this week, like the Facebooks and others. So we'll see if perhaps some of those can inject some vol back into the marketplace, keep us at least at these mid-teens levels from a VIX perspective, or we're going to be back down in the 12 or 13 handle range by this time next week. Probably a little bit of the latter, but we shall see next week. And that's unfortunately about all the time we have for this episode of Volatility Views. But before we go, as always, Mr. Greasy Meatball, what is cooking? You said you had that fun writing weeklies webinar going on. What else is cooking over there in the land of the pit?
We're gonna do an extended weekly discussion a week from tomorrow on the 25th. It's gonna be 3 to 4 hours of me and Andrew Tracy Giovinazzi, the lobstertrader.com, and by the way, there is no lobstertrader.com. I should probably buy that, huh?
Is his middle name Tracy?
It is Tracy.
I knew it was ATG. I never thought it was Tracy.
Yeah, it's Tracy.
How have I not known that all these years? There's a lot of mockery that I have not acted in, and I need to catch up.
Anyway, so we're going to be teaching a class. It's going to be 3+ hours. It's $147. Super good value. Just go to optionpit.com/weeklies. That's also where you can catch the replay of that video.
Speaking of your friend, Mr. Tracy, I was doing the Options Oddities Palooza with him this morning. He and I had an interesting discussion. Maybe we'll wrap up on this because it's kind of interesting. We were discussing, again, one of my favorite trades, the stupids, and how we were seeing some going up in size. I forgot what the underlying was this morning.
XLF, right?
Yeah, I think that's what it was, XLF, doing an 80,000 lot put stupid, so buying them one strike apart. And I've lamented many times, even on this show, how I don't see a lot of really use case for the stupid. I think the name is really apropos in that sense. But I've heard some institutional people try to argue to me that if they spread it out, they can get a little bit better fills on both. I've always maintained that market makers aren't stupid. If they're selling you on the 24 strike, they're not going to give you a deal on the 23 strike.
No.
That makes no sense to me.
It's a way of, the reason why they do the stupid is basically when you add in the stock position, it then converts the trade into a strangle. And so they buy the at the money so that they get, so they have a 50 delta there. And then they buy the next one down so they maintain up some long delta while still having a strangle on that. That's the main reason I've seen people execute that.
That was so tight. It was like one strike wide.
It was the 24-23 in June.
Yeah.
So they bought the at the money put, and that was versus probably one up against stock. And then they buy the 23 puts, and that turns it into a strangle.
Yeah, I can see if there was stock. I don't think there was any stock going up with this one.
No, but the guy's holding the stock.
Yeah, he's holding the stock. Yes.
So that's my guess, is that he's got his own stock position. I don't know why you wouldn't want the straddle. My guess is, he wants a little bit of long delta to it rather than just having it as a straddle.
These are the great esoteric discussions we get into on vol views. I still think you're better off getting it all done on one strike, but I could maybe, of all the arguments I've heard, that might be one of the few that has any real possibility. I've had people who run a lot of sophisticated execution software try to argue to me that they can spread it out across multiple strikes and that will somehow save them in executions, and I've kind of just laughed at them. But
no, you do this because you want a kind of a synthetic strangle that has a long delta to it. That's really the only use case.
Yeah, that's true. If you do spread out to a little bit on the downside, you're saving some money, but also you're getting a little bit fewer deltas there. So that might make sense if you want to leverage it from a delta perspective. So there you go, listeners.
That's exactly what it is. It's a delta trade. It's not anybody who's giving you that whole execution baloney has just clueless.
I've heard many clueless definitions for strangles in the past. It wouldn't be the first time.
No.
Strangles. Stupids in and of themselves are usually pretty stupid. But hey, we'll end on that fun note, listeners. If you trade strangles, let us know why you would and why you think someone would execute this way. Stupids, I'm still waiting for the great Too Soft Stupid webinar, but we'll have to wait for that. Maybe the next Option Pit webinar could be why you should want to trade a stupid. There you go. I'm sure you get at least 5 people.
Yeah, I don't know. I'm a little afraid to do Come see Stupid Option Pit.
It's marketing. It sells itself. I want
Stupids at Option Pit.
you get at least 5 people for that one. That'd be huge.
Andrew and Mark, Stupids at Option Pit.
I love it. Now I really want to see it. That'd be good. All right, before we go too far down the Stupids rabbit hole, listeners, that's going to do it for this episode of Vol Views. Thanks everybody who wrote in. We love to hear from you guys. And on behalf of Mark and even Jared, who couldn't make it today, but should be back next week, and indeed myself, we'll see you guys all next time right here on Volatility Views.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail at 773-669-4VOL or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider. Volatility Views is brought to you by Russell Investments, a global asset manager and one of only a few firms that offer actively managed multi-asset portfolios and services that include advice, investments, and implementation. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.